Hey everybody, Froggy Stonks here. Nothing I say is financial advice, entertainment purposes only, not a financial advisor. So I put this together. This stream today is going to be covering my main thesis on what's about to happen with AMC stock, what Aron could and what I would hope he would do, and what's going on with these failure to delivers, the predatory naked short selling, and the rules that govern that, plus a couple lawsuits that have already been filed, taken by the SEC in the past against this type of action on other companies. So really important video. I'm going to keep it directly to the point. And I'll take some comments at the end, but this is really important. Now I'll go to my tweet first. Rule 10b-21, naked short selling anti-fraud rule. SEC past actions. This is just one of like 7. Options Express et al. Admin proc file 314848 June 7th, 2023. This is a SEC action against predatory naked shorting using Rule 10b-21 that was put in 2008. This is, and to finish my tweet, this is 100% happening with AMC stock, and CEO Adam addressed this in the 2022 annual meeting, which I have keyed up, and I want you guys to listen to it so you know what I'm talking about. I'm sorry about the sound quality on the annual meeting. It is a little rough because they were doing it over the phone, but here it is. We'll listen until we get to the point of the part where I want you guys specifically to hear.
10 seconds left.
I'm all set. Thank you for everything you've done. I really appreciate you. I'm happy to be here to meet you. Thank you.
First of all, thank you for sharing your observations with me.
Nice.
And I think we have been pretty clear that as recently as yesterday, that we know of 516.8 million issued and outstanding shares. We have said repeatedly, over again, many times in the past year, that there is no reliable information about any shares above that number presently. We've heard all of the speculation about so-called fake shares or synthetic shares, concerns about trading practices that you all voice on Twitter and Reddit every day, which I read almost every day, not quite every day, but almost every day. And we've said that because we have no reliable information and we are a public company and securities laws are quite precise about what the CEO of a public company can say and cannot say, that the best thing for us to do is make no comment. It doesn't mean that we're not looking carefully at what's going on around us. And I will disclose today, for example, something you are not aware. I know that one of the many concerns that you all voice is something about fail to deliver shares. You should know that we have contacted the New York Stock Exchange on more than one occasion over the past year to inquire of the exchange about the failed to deliver shares in the AMC stock. And I wouldn't be surprised if we do that again in the near term. So we are watching.
That is the single most important thing Aron has said for the past 2 years. We are working with the NYSE on failure to delivers, and we plan to do so again in the future. Failure to deliver loophole. We covered this in the last video. Failure to deliver that persists for an extended period of time may result in a significant large unfulfilled delivery obligation at the clearing agency where trades are settled. We talked about this for this part right here. I highlighted it. It shows that Rule 204 provides an extended period of time for the 35 calendar days, which is where we get our T plus 35. But the failures can't be intentional. If your failures are intentional and they're consistent, they become predatory. And that's where Rule 10b comes into play, 10b-21. This is where these SEC actions come into play. We all know that AMC has been consistently and constantly naked shorted through the use of failure to delivers for over 12 months Easy. Very easy. We have the FTD data. And I'm telling you, as of August 15th, the week where we ran up to 27, August 15th, we had nothing but downward price action from 27 up until the split of APE, right? Or not the split, the APE dividend. That can only be contributed to naked shorting. There might have been some sale pressure, but naked shorting took effect. I think you're going to see big failure to delivers for the second half of August. The funny thing is, August 15th, T plus 35 is September 30th. Aron's birthday. It's literally the man's birthday. Not only that, you guys have heard Bigham's going out. We have phase 6 starting tomorrow if they don't delay it again, which is going to increase initial margin requirements for a lot of positions out in the open market. So in this, we covered the other day in the video that the shares must be, the failure to deliver shares must be settled by let's see, let me get to the, okay. Broker or dealer, closing out requires the broker or dealer to purchase or borrow securities of like kind and quantity. That doesn't say it has to be the exact same security. I'm working with the SEC and NYSE right now. I'm waiting for them to call me back to define this sentence right here. My theory is that AMC, as a failure to deliver, can actually be covered by using another security that is like AMC and the same quantity of the failure to be covered in a type of a swap. So they can go borrow shares from another company that the securities match and are filed and they're exactly the same. And they can use that to cover their AMC. So now that new position is borrowed from another company. AMC gets the shares back, but in reality, they've just diluted the market float of AMC. So I'm trying to figure out from the SEC if that's a loophole that allows them to do that, where they can cover an AMC FTD with another security that's like it, the same amount. They close the AMC position out and that new debt goes to a different company. I think they can. I think that's why we've had bad price action from 65 down. They've basically created synthetic after synthetic out in the open market that we've bought, which reduces demand. Well, it doesn't really reduce demand. We kept the demand up, but it increases supply to an amount where it makes your price action go down. They've flooded the market with AMC shares that don't exist, so it's diluted the market share, the market price, even though we know there's only 516.8 million legally authorized shares out there. And that's what Aron was talking about in the clip I just played you. He said, we don't have any reliable information of any shares out past what we've legally issued. Well, they do now. APE has exposed it. We have seen it. They had to reverse trades on APE. All the AMC shareholders still don't have their APE dividend. Some brokers refuse to sell APE, making it closed position only because there is no one-to-one. There's too many APE shares. There's too many AMC shares out there for APE to be a one-to-one. So now Aron has the reliable information he needs to go to the NYSE and the SEC and tell them to enact Rule 10b-21 through an AMC official complaint. It's not just going to be Aron. AMC Theaters needs to file an official complaint with the SEC, get their lawyers on it. Now they have the cash on hand to do that, to go to war. That's why he called it a war chest, to file Rule 10b-21 through Reg SHO, naked short selling, anti-fraud, SEC past actions. We have 7 examples of where this has already happened in the past, which you can go and look up here. This is everything you need to know about this. Here are, I think, several different 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 examples of where this rule was used by the SEC to go after people who are predatory naked short selling, meaning they are failing to deliver purposely on shares they knew they did not own. They knew they did not own the shares. They purposely borrowed or shorted them, creating synthetic shorts. and then they failed to deliver for T plus 35 anytime anywhere in that period, but they did it consistently. Now we have all the AMC failure to deliver data for the past 12 months. It's all here. I mean, hell, FibTel's even got it up. SEC has it filed. Just not even how many weeks ago we had millions. 2022, June 28th, 9 million failed to delivers. 9.6 million failed to delivers, contributing to $137 million just on one day. What the hell? Everything we need is here. You guys can go back, watch this video if you want to re-listen to the 2022 annual. Aron starts talking about this stuff at around 29 or 28.50. Go look at the past failed to delivers. Consistent predatory failed to delivers. Naked shorting, 1 million, 2 million, 3 million, 2 million, 1 million, another million, 1 million, 2 million. And this list goes on and on and on. Even 800 to 500,000 failed to delivers. If you're consistently failing to deliver purposely, say somebody borrows shares and shorts the stock, or they buy a bunch of puts and the calls run in the money or whatever, and they don't deliver, that's predatory. And not only that, this is how they're using it. They wait until retail loads up on all these call options on AMC. So there's a ton of calls, lots of institutions, lots of retail, lots of money in the call option side. They let the price run, they make a big bull trap, and then right before Friday, they start failing to deliver in massive amounts, which leads to the price coming down below max pain, below the Hoyle's method, highest open interest, lowest strike, right? If max pain is 19, but there's 7,000 open interest on 17, they drop it below 17 to rip those premiums out. So they fail to deliver, they drop the price, they steal everybody's premiums on Friday, and their puts go in the money. They take that cash, they go borrow another security from another stock, they clear AMC fail to delivers, diluting the stock, making the price go down even further, and then they walk away. And if these big institutions have created shell companies to borrow the like security from, it's endless liquidity. They can keep creating companies or use companies like AMC to generate this endless liquidity fail to deliver system, which is why you saw in the GameStop report from Congress that the Apex Clearing CEO said we have limitless liquidity, and they do if CEOs and board members and companies, right, AMC, does not go after them for the predatory naked short selling using rule 10b-21, the anti-fraud rule. Naked short selling anti-fraud rule. It's all there. Aron said, we got a war chest. We're talking to the NYSE about fail to delivers, and we plan to do so again in the future. He told you that. We know there's naked short selling. He's proved it by putting APE out into the market to show the differential between AMC and APE, which we all see. There's 31% short interest on APE and 21% on AMC. How could that be possible if it's 1-to-1? If you short APE, you got to be short AMC, vice versa. You have to have the shares. Especially if you were short before the dividend. It's absolutely insane. So this is me, man. This is where I'm headed. This is what I'm waiting on. Besides this, we know massive fundamental changes are coming for AMC's balance sheet coming forward in 2023. Retail popcorn, $300 million annually a year, no problem. Co-branded credit card. There's 4 million APEs. If even half of the retail investor population goes and gets one of those credit cards and uses it, that's over $2 billion a year. AMC had 52 million people show up in Q2 to movies. 52 million people. If even an eighth of those people get a co-branded credit card, in which Co-branded credit cards or branded credit cards make about $175 per active account a year annually. It's a multi-billion-dollar revenue stream, and Adam Aron knows it. Excuse me, my allergies are so messed up right now. So we have, say this, $2.5 billion in new revenue streams coming forward. We'll say $2 billion conservatively. AMC's revenue just on base movie and concession sales is up over 800% since the pandemic, right? We're getting back to EBITDA positive. So the glorious thing about this is they come out, they address the predatory naked short selling with Rule 10b-21, citing cases in the past that have already taken action and been approved, right? They do that, they get that going. Then Adam Aron comes out, shocks the market with APE. They say, hey guys, you need to back off our company a little bit. So now the predatory naked short selling and the FTD generation is going to slow down. Our price is going to increase. Adam Aron goes, you know what? I'm going to sell some more APE out into the market once APE is over $10. He makes $3 to $4 billion, pays off almost all the debt. We get diluted, but the price goes up because shorts have an opportunity to cover, just like Bigums was talking about. Hashtag save Billy. Shorts start covering, our price goes up. Shorts get out of the market, AMC goes up, we get our squeeze, AMC gets its debt paid off, but they also protect themselves in the future by going after these predatory naked short sellers, which he's talked about in the past. In 2019, he said, we've been the victim of some short selling lately. AMC has been predatorily naked shorted for almost over 4 years, 5 years. It's in the chart. It's in the FTDs. It's in the math. Adam Aron's talking about it. So I'm super excited for this, guys. Not only do we have Rule 10b-21 in our court, Adam Aron talking about going to the NYSE about fail to delivers, which I think are going to be massive for the second half of August. We also have the co-branded credit card, the popcorn coming up in 2023, which he said he was taste testing just a couple months ago. Movies are coming back. This quarter is probably going to be a little slow, like he said, but they did some good promos. Dragon Ball Superhero crushed it for its type of content, over $30-40 million in the US, beating out its predecessors. But Q3, Q4, and Q1 have massive movies. Avatar, Black Panther, John Wick 4, huge movies coming out. Marvel Phase 5 or 6, whatever one we're on. And they're talking now, just like we said, Disney Plus Day, Cinema Day. They're going to play Disney Plus titles in AMC theaters. Like they're going to replay Encanto, which it didn't get the crowd it deserved because of COVID. They're going to replay those in theaters for a stretch in September, where if you have a Disney Plus account and you show them at the counter, you're going to get specific prices on concessions and movies. So they are drawing in a crowd. But Q4 and Q1 out to 2023, 2022 Q4 and Q1 2023 are going to be massive, guys. They're going to be huge. And Adam Aron said popcorn will be in retail grocery stores in 2021. So we have all those catalysts, all these good things going for us. I personally believe myself, it's not financial advice, it's not a guarantee, but I believe Adam Aron is going to the NYSE to work on Rule 10b-21, naked short selling anti-fraud rule, and has been for a while. But like the man said, we have no reliable information on any shares past what they legally issued. Now they do. The man's smart. They have a lot of lawyers. He's even said, I can't say this, my lawyers are on my back. They have a team of people working on this. If you think that they're going to continue to let this happen for the next 5 years, no. It's his job as CEO to protect the company. That's what he's going to do. They're working up a case to put together to go against the NYSE, to go against the market makers and the hedge funds predatorily naked shorting the company to get them off the backs. And when they do, AMC is going to run fundamentally to $30 to $50. So that's the video, guys. That's where I'm at. This is very black and white. The catalysts are there. The events are there. We have the data. APE's a mess. We see it. It's all there. So that's what I got. That's what I got for you today. Delayed noise. Good morning, Froggy. What's up, man? Space Ape GM. I hope this will actually make an impact. I think it will. Bill Hester. I am Billy. Safe. Yeah, if you guys haven't watched Bigum's video yesterday about how this dilution's going to work and why it's good, shorts can't get out of their plays. They're stuck in the market. There's a liquidity drain on them. But if they cover, they're out of business. So what's going to happen is they're going to drop the price of APE and AMC so they can start covering. Go watch this video. Highly recommend it. Excuse me, my allergies are absolutely horrible. I believe companies like AMC are brought public explicitly to be shorted to zero. Probably. That's initially probably what they thought they were going to do. I think they were brought public in 2013. I'm not sure it was a good decision. Whatever. If they didn't, we wouldn't be here today. But now they see AMC, the theaters aren't going away. It's not going to be wrapped up into Amazon. I fully believe the whole point was to bring AMC public, to put $5-6 billion in debt into it, short it down to nothing, so Amazon could gobble up all the AMC market share for themselves after bankruptcy, which now we see Regal is going out of business, or they're under bankruptcy protection laws for restructuring. But it's a super good opportunity now to consolidate the movie industry, the cinema industry, into AMC instead of Amazon. Streaming's not going to win the day like everybody thought. I am absolutely exhausted with streaming. It's just boring at this point. It's lame. I like going to the movies, and so does everybody else. So now the market's like, hey, let's just consolidate the theaters into AMC and make it a successful company, which Adam Aron is doing. So basically hold. Yep, that's right, BlackRock. Hashtag say Billy. Good morning, guys. Have a great day. You guys too. Thank you for coming to the stream. Please like and subscribe. It helps push this type of content more out into the community. And from what I'm being told by you guys, we've increased our followers by almost 900 in the past few weeks, because I know everybody's sick of all these other YouTubers that are always coming out with clickbait, doomsday crap information like Lou, man. His information's garbage. He's always wrong. But I noticed that in the analytics, it shows only like 45% of people who are watching the videos are subs. So if you could sub, I'd appreciate it very much. I will be hopefully handing out gift cards for AMC on Twitter from the money I made this month on YouTube, which is about $200 in August. I'm going to take all that money, buy AMC gift cards. I will be posting them live on Twitter. First come, first serve. You scan it and log it into your AMC Stubs app as quick as you can. If it says it's no good, somebody claimed it, that means he didn't beat it to the punch. But I should be putting out 10 to 20 cards, whatever $200 is going to get me. And I plan on using the money from only commercial monetization from this channel every month to buy AMC gift cards to hand out to the community. I don't accept tips or super chats or anything. I won't be doing any of that. But if you're not on Twitter, please go to my main YouTube page. Up at the top, there's a link. It's got my Twitter address. Click on it. If you don't want to be engaging on Twitter, you don't have to. Make an account, follow me, just so you can listen to space calls, and or you can scan those AMC gift cards that you can add to your Stubs account. Anyways, guys, that's it for the morning. I'm going to go get another cup of coffee, blow my nose, and take my dog for a walk. You guys have a great day. Don't panic. The market's in the dumps. There are big things happening with APE and AMC. It's just going to take time. When Adam Aron is quiet, it means he's working in the background, planning the next chess move. Have a great day. Froggy Stonks out. Billy